Welcome back. Good credit opens doors to numerous financial opportunities, providing access to favorable financing terms, reduced insurance premiums, and increased chances of rental housing approval. Whether you're establishing a credit profile or seeking to improve it, there are strategies to boost your score swiftly. Joining us now is the Bankrate Senior Industry Analyst, Ted Rossman. Ted, thank you so much for joining me.
No problem. Thanks for having me.
Now, what are some key advantages of having good credit and how can it impact one's financial opportunities?
Your credit score is one of the most important numbers in your financial life because it goes a long way toward determining whether or not you're approved for loans and lines of credit, even some non credit obligations, things like renting an apartment, getting a utility or cell phone plan. Even some employers will check credit reports. It really is a very important number. It's a report, basically, on how likely you are to pay your bills back in the future.
Now, could you elaborate on how good credit can lead to lower interest rates and higher credit limits and why these factors are actually very important?
There can be a huge range. For something like a mortgage, even a quarter point or a half point can make a really big difference, tens of thousands of dollars over the life of the loan. For something like credit cards, if you have good credit, you can get a 0% balance transfer card and move your existing high cost debt over to a card that maybe won't charge interest for almost 2 years in some cases. The average credit card charges over 20%. If you have bad credit, you might be charged 30%, or you might not even get that card at all. We see it really across the financial spectrum: mortgages, car loans, credit cards. If you have better credit, you're going to get better terms, and that can really add up over time.
Now, how can good credit affect insurance premiums and housing approval?
In terms of housing approvals, landlords are going to check your credit. So even if you're not taking out a mortgage, even if you're renting, they still want to make sure that you're paying those bills back. So they're definitely going to look at your credit ahead of time. It really is one of the most important numbers in your financial life. It's just so important to practice those fundamentals: paying your bills on time, keeping your debt low, showing that you can successfully do this month in and month out. There are some things you can do to improve your score pretty quickly. I'm a big fan of these alternative credit scoring processes, things like Experian Boost, that with your permission can look at your bank account and pull in things that haven't historically counted but maybe should, things like streaming service plans and utilities and certain rent payments. This can be a way to improve your score based upon behaviors you're already doing.
Now, what makes managing credit responsibly over time an effective strategy for rebuilding credit?
If you've had a mess up with your credit in the past, there are some things you can do to improve it. Now, unfortunately, negative payment history sticks with you for 7 years. The impact is most pronounced in the first couple of years, and you can offset it with other things. It won't completely wipe it away, but if you have a late payment, let's say, really what you want to do is fill your report with as much positive info as possible to try to counterbalance that. So we certainly want to be paying all of our bills on time every month if we can. Keep your debts low. When it comes to credit cards, they usually report as of the statement date. So your credit utilization ratio is credit you're using divided by credit available to you. It can make sense to throw in an extra mid-month payment or two to knock that statement balance down before that statement even comes out. That can be a quick way to improve your score. There are some things that you can do. You can get on a parent's credit card as an authorized user, and you can piggyback off their hopefully positive credit history. You can sign up for a credit builder loan. Some fintechs and community banks and credit unions have these. It's basically a form of forced savings where you put money aside every month, and then at the end of the term, maybe it's a year, you get to keep almost all of it. They usually take out some minimal fees, but that form of forced savings known as a credit builder loan, as long as it reports to the credit bureaus, that can help. Or you could sign up for a secured credit card where you put down a deposit that serves as the credit line. It's very low risk, but as long as it reports to the credit bureaus, that can help you improve your score.
Now, I've seen online so many people have all of these tips and tricks on how to build credit quickly. Some people say don't pay too early or pay not late, but maybe just before, you're supposed to pay it. How can people know that the advice that they're getting is legit and actually won't harm them in the long run?
Sometimes we can overthink these things. I mean, the general rules of the road are pay your bills on time, keep your debts low, do it over the long haul, manage different types of credit, kind of lather, rinse, repeat. Sometimes there is misinformation out there. It is important to factor in where you're getting that. We have good info at Bankrate. You can get info from the Consumer Financial Protection Bureau or the credit bureaus themselves, Experian, Equifax, TransUnion. FICO came up with the most widely used credit scoring system. So these are all reputable sources. It is true that if you really want to geek out over credit scoring, there is this thing called the all zero except one method, where you basically pay all of your credit cards off even before the statement comes out. And then you have one other show a very small statement balance. So not carrying debt or paying interest, but even just on that statement date, a small balance that you pay off right away. Something like that is probably overkill for most people. But, that brings up another important point, which is what is good enough. The credit scoring scale goes from 300 all the way up to 850, but you don't need to be perfect. In fact, very few people are. But once you hit the mid 700s, you're generally deemed to have excellent credit, and there's really no practical benefit to scoring better. Most lenders are going to treat a 740 or 750 the same as they would an 840 or 850. So you don't need to wrangle every last point. Where it does matter, though, is on the border. If you're a 690 versus a 700 or a 660 versus a 670, that's where the battleground is more important.
Now, can you discuss the importance of setting a goal for your credit score and how it could influence credit building strategies?
You can probably meaningfully improve your credit score within about 6 months. And, the specific tactics will vary. If you're being dragged down by an error, that's an easy fix. So if you haven't checked your credit in a while, everybody should do this. Go to annualcreditreport.com. It used to be annual. That is still the name, but you can actually get a free credit report every week now. So go to annualcreditreport.com. This is a free government mandated resource. Also, a lot of banks and credit card issuers will give you credit scores and reports for free. You could get one from myfico.com or experian.com. Figure out where you stand. And maybe there's an error. The Federal Trade Commission says about 1 in 5 Americans have mistakes on their credit reports. So if you find one, report it to the credit bureaus. That's an easy fix to get wiped off. If it's a legitimate misstep, like a late payment, that's going to stick with you a while. But like I said, there are some things you can do to counterbalance it by filling your report with good info. There's also such a thing as a goodwill deletion. No guarantees it'll work, but sometimes it makes sense to call or write a letter to the lender and maybe just explain, be honest. But hey, I was traveling, I had a family member in the hospital, I was busy, whatever it is. They may actually wipe that off just because you asked nicely and you're otherwise a good customer. It might work, but it might not. But it might be worth a shot.
Well, I definitely think this is such an important topic to discuss because I know that for so many things, we have to have a good credit score. And I know that it stresses a lot of people out, especially a lot of young people who are kind of new to this entire world. So I definitely want to take the time to thank you and just appreciate your time for, joining us and kind of educating us on the things that, we can do to build better credit. And, if somebody is struggling, that, there is a light at the end of the tunnel and that there are ways to improve this. So once again, thank you so much for joining us.
My pleasure. Thank you.
For more information, you can visit their website at bankrate.com and follow them on social media at Ted Rossman. We've come to the end of our show today. I'd like to thank all of our guests for joining us and you, the viewers, for tuning in. If you missed any part of today's show, you can catch the recable cast on Optimum Channel 67, Verizon Fios Channel 2133, or watch anytime on the web at BronxNet.org. You can catch a brand new episode of Open with Rena Valentine on Friday. This wraps up this episode for us. I'm Kibin Alleyne. Make sure to keep this channel wide open. Take care.